This is a video in which I'm going to talk about the common scams in trading. So you should know that most people who offer trading services, be it educational materials or those who trade for people, most of them are scams, although there is a smaller percentage of those who are legit and those who are profitable. But itself, trading is not a scam, is what most people may think, and they are actually profitable traders out there. If you go to some of the websites with trading championship competitions, you can actually see people who have annual track records where they are actually profitable in different divisions, and you can actually see their percentages. This one is a year which hasn't yet been complete though, but they are actually a lot of traders out there. Even you can see there in recent competitions, people with returns annual which some people actually think are impossible, and you can actually see some of those are still pending audit, but some of them have actually been fully audited, return fine out there. Okay, so some of them are trading methods which people are teaching out there, which are scams, and they are trading methods which are not consistently profitable, okay, which have been used for many people, and they've been working. A lot of people would have already made money with those methods, and because they are trading methods used with a lot of people and known with a lot of people in the trading industry, word would have already spread that they are profitable, and more people would have been using them. So some of those unprofitable trading methods are the ones I listed first in this video. So this is where you have Wyckoff, and some traders may show as if these trading methods are profitable, but it will be only because some of them only show screenshots of one trade which are the profitable trades, and they do not show trade histories where you can actually see a summary of all the winning and losing trades. And even though some do show trade histories, they only show trade histories of a period where the trading method might have responded, like maybe just 1 month or a full month or a few months. But you actually need to see at least a year or more, especially at least a year. A year can now show good level of consistency in trading for a trading strategy or method, especially for day trading. Maybe for swing trading, which are trades which last a few weeks, you might need a few years. And some of these trading methods, when backtesting, some mentors may teach as if they will be profitable because they will be teaching people to trade even if the trading strategy has low performance, but to aim for high risk reward, meaning that on the trading, if I come to MetaTrader, they will be saying, well, you can still trade the trading strategy even though it has a low performance, a low win rate, but then try to aim for bigger profits compared to the amount of money you would have risked. So for example, I'm just going to put three lines, okay, where the middle line here will be where you would have entered your trade, and then you would expect your trade to go in profit up to a higher distance than to the distance where it will go lower, which will be your risk. So in that way, if you win those trades, you would get more profits on each trade than the losses that you would get on the losing trade, because the distance which price moves would determine how much money you win or lose. But then the problem now with trading with low performance and expecting a higher risk reward that the mentors won't tell you is that when you have a strategy which has low performance, it also means that there are less chances for price to hit your take profit target, which is where you'll be expecting price to reach, because you will have low momentum, which is the reason why you actually have low performance. So you might only be profitable for a certain while, maybe sometimes even up to for a few months with this strategy, but you may have problems now in achieving long-term consistency of a year or more. There are actually some people who actually can get profitable in trading for a few weeks, a few months, but can end up quitting the business because they might end up no longer have longevity in their trading strategy. Okay. So besides Wyckoff, there are also even other trading methods which are also not profitable, taught by scammers. Okay, so the other trading methods which are not profitable, we have harmonics, and then we have support and resistance. Okay, these are very common trading methods in the retail sphere. Okay, the support and resistance, that way people say that if price goes up, actually let me use these lines. They will say that if price goes up, it's going to bounce off from a certain line and come down and obey that support and increase to that level of resistance and come down, and they'll be making predictions trying to make price go to those support and resistance levels. But market makers actually move price usually against those support and resistance levels, and you actually be more profitable if you actually trade against them. Then another one is supply and demand. Okay, price does not move by supply and demand, although supply and demand may affect trading of commodities more, and oil also. And you actually have a better chance using supply and demand maybe in investing stocks when buying and holding, but not in trading. And supply and demand also has a problem of being subjective, because there isn't really a good way in which people are taught of identifying the same areas of supply and demand when many people are trying to use it. And then another trading method, we have candlestick patterns. Okay, so be also careful of the book, the Candlestick Bible. That's also another common book you will find circulating in the retail trading sphere. And you also have to know that price does not move by candlestick patterns. It only moves because of seeking liquidity which is going against the common retail trading methods used by most traders, like supply and demand and the candlestick patterns, and also even support and resistance. Okay, so the candlestick Bible, that's also another book you have to be wary of. And then there's also another popular book which teaches unprofitable trading methods. We have Technical Analysis by John Murphy. That's another common trading book which teaches trading methods which are not profitable. You actually may be profitable if you actually do everything which is opposite what that book teaches. You actually will be profitable if you do that. So this is another common trading book which you also have to stay away from. Okay, and then also we have indicators. You also should not use indicators in strategies for entries, although you could use maybe moving averages if you want on higher time frames for momentum to trade, especially if you use the 9 and 18 exponential moving average crossovers on daily time frames and less, or if you use the combinations for period 18 and period 40 exponential moving averages for the weekly time frame and monthly time frame for momentum. They can show momentum which improves your trading, but you shouldn't use indicators to determine where you open trades. And the other problem with indicators is that some of the indicators are repainting indicators, like especially the oscillating indicators, like your RSI, your stochastics, okay, and even the MACDs, okay, even the RSI, that one, they have a problem because even when you try to backtest and scroll back in the charts, you may be seeing as if price went lower after the indicator also on the lower panel went lower. But the problem is the indicators change readings, and you will end up having different results compared to the ones which you saw in your backtest when you will now be trading, especially for the oscillating indicators. And then another trading method which is not popular, which is popular but not so popular, which is also not profitable, we have Beat the Market Maker, where the author Steve Morrow claims to have talked to an ex-market maker on his dying bed and was shared trading secrets. That is a lie, and people who were part of the market makers sign non-disclosure agreements which they are not allowed to reveal how the markets were made. That is also not a profitable trading method. And then besides that one, another one which I left out is level 2 data, which is when people say it's actually a source where you can see where institutions leave orders on the market, and people try to take their trades at those levels. And that is actually also another problem in itself, because institutions do not show, especially the ones which move the market, they do not show exactly where they place their orders. It will be foolish for them to do so. because everyone would now take advantage of knowing where the market will go. And on level 2 data on those platforms, the big institutions also sometimes do what's called spoofing of orders, where they can put sort of a fake order. They can place an order, and then when price reaches that level, they will remove that order when you would have already placed your trades. So you also should not use level 2 data, although some people will claim on the internet that it shows where institutions drive price. And then the other trading method which is not profitable, we also have candle range theory. Okay, that is also not another one. If you want, you can backtest the trading methods and you can see their strategies for at least a year or more, with at least 20 trades within each backtest, and you will see that they do not win more times than not. And then another scam is expert advisors. So expert advisors are when trading platforms like MetaTrader or other trading softwares put a list of traders who give a way for other people to copy their trades. Okay, here they may be in the traders community on MetaTrader there, although I didn't sign up with them. So the problem sometimes with brokers may also have expert advisors listed. Brokers may B-book your trades. Okay, there's A booking and B booking. A booking is when brokers send your trade directly to the market, and there will be less conflict of interest between you and the broker. B booking is when brokers are counterparty to you and they make their own market with almost the same prices as of the actual market. So some brokers now on the list of expert advisors may put people who are not profitable and change the results to make them look as profitable traders, so that in the end you will lose money and they will make money. And they also do the same thing with what's also known as copy trading. Okay, what's also known as copy trading. Brokers and the platforms which offer copy trading services like Zulu Trade and other copy trading softwares, they can also do the same and partner with brokers. Brokers, remember, are the companies which we trade through, because we can't put orders directly to the bank because we have small amounts of money. So we trade through the brokers, and then the brokers send our orders straight to the banks in bulk. So whenever you want to use a copy trading service, make sure that you check for its online reviews. Even also, you can do the same for some of the most popular mentors. So Zulu Trade is another copy trading platform. So let me just open it so you see its website. And it has a problem because it partners with brokers, and then Zulu Trade changes the performance of the traders listed there to make the profitable traders now to end up having bad results, and to make those who are unprofitable to have good trading results. And then they will tell the broker, whenever you link your account with the copy trading platform on the broker, and then the broker will now book your trades. So you will now be counterparty to your trades, and you will now lose money to the broker, and then they will share the profits. So one source where you can see reviews for brokers and other online trading services is Trustpilot, where people come and leave reviews. And if you want to use a copy trading service, you can try and come on Trustpilot and then check for the negative reviews. Don't focus so much on those who leave positive comments, because sometimes some of the brokers and the copy trading services may pay some people to put some positive reviews on their website. And for Zulu Trade, some people were actually complaining there that they were profitable and wanted their trades to be copied by other people. But now Zulu Trade was now changing their trade results. And if the person was profitable, Zulu Trade was now actually making them to be unprofitable and have bad results. So on Trustpilot, you can then just search any name of the broker or copy trading service, or even big popular mentors. Some of them will also have reviews left with people on the website. And you can actually see that Zulu Trade has a bad review, which is 2.8 out of 5. And you should be wary of it, because Zulu Trade also is available on FX View, one of the best brokers available for us Zimbabweans. So you shouldn't copy trades from that copy trading service. And if you would go to the negative reviews, if you select on filter, you can then select only those of 1 star, 2 star, 3 star. You can just select the negative reviews and then see people complaining there. And remember that some of the positive reviews from brokers or some of these copy trading platforms may be people who are IBs of the broker, who work for them, who they pay to actually give those profitable reviews. You can actually see this person complaining with a 1 star out of 5. You can pause and read it later on, or go from to the website. So even now for expert advisors, where you can also copy trades from other people, the other problem with expert advisors is that, remember I said that sometimes they only show maybe the month or few months that their strategy was working well to advertise their performance, which is, this is also known as cave fitting, where they can only insert on the platform or the broker just the few months which were profitable, which may be sometimes in a trending market where price may be just going high and won't be in a consolidation. But when price now maybe goes into a consolidation and they can't get big profits for them to cover for their trading costs and commissions and spreads, they may now start to have problems. And then the other scam are unregulated brokers or shady brokers. So in trading, you can only trust brokers which are tier 1 level regulated or tier 2 level regulated. Regulating agencies are companies' boards which overview the activities of the brokers to make sure that they try to treat their clients fairly, their clients, which is us, the traders. And if you have a dispute with the broker, if they are cheating on your trades, you can send a complaint with your video or photo evidence to the regulating agencies, and the regulating agencies will now try to resolve the dispute. And if the broker continues to cheat its clients, the broker will be revoked of its license. And that will affect the broker because people who are well informed will only go to brokers who are listed with the regulating agency. Okay, so besides checking for online reviews on Trustpilot for brokers to see people's experience with the broker, you can come on this website also where regulating agencies are ranked. So there are 5 tier levels. You can always take the screenshot and then look for this article. Okay, we in Zimbabwe, because of the trade sanctions, we don't have access to tier 1 level regulating agencies. We only have access, so far I've seen that we only have access to tier 2 levels, but and below, of course. So tier 1 level will be the best, followed by tier 2 level, and then the worst will be tier 5 level regulating agencies. So the best ones are CFTC, Commodity Futures Trading Commission, and then also FCA, not this one of South Africa, but just FCA. Those are the best two, and then followed by ASIC, this one from Australia. This one is also a strict regulating agency. It also is strict on brokers. So the first group, these are the tier 1 level jurisdiction, highly trusted, where you have the ASIC, and these tier 1 level regulations do not offer services for Zimbabweans. So what brokers do now, even though the broker may take Zimbabweans, brokers can have different regulating agencies that they offer to clients of different countries. So this is why you have to be careful when opening an account with a broker. You should ask them on support or even check on their website which regulating agency will be regulating your account. A broker like Exness can have FCA, this one FCA UK, which is also one of the best regulating agencies among CFTC. They can have FCA regulating traders in UK, Exness broker. But for Zimbabwe, they will give us Financial Service Authority of Seychelles, which is a tier 5 level, which has poor regulation and actually doesn't regulate the actual trading, but only regulates deposits and withdrawals. So you have to make sure you know which regulating agency the broker is giving you. And then these are also still tier 1 level regulating agencies. Then after that we have tier 2 level, which can still be trusted, okay, where we also now have Financial Sector Conduct Authority of South Africa. So that is the best one that we can get as Zimbabweans on FX View broker, and then also another broker I showed you, which is FCS broker. The entire 3 level jurisdiction regulating agencies will be worse. And then for this one, Financial Service Commission Berliz, it's a tier 4 level This one is the one which regulates accounts of Zimbabweans. If you are using a broker called I'll show you the broker, I'm forgetting the name, but the broker actually has a problem. The regulating agency has a problem. If you go on 55 Brokers website, which is a group of people who also try to help the trading community by showing scams and recommending other good services and advice in trading, they say that this regulating agency, FSC Berliz, the Financial Service Commission of Berliz country, it offers bad regulation, and I think it also maybe favors the brokers against the clients. Then in deriv, if you are using deriv broker, the one we trade synthetic indices with, it has this tier 4 level regulating agency as one of the regulating agencies that you can choose for your account. The Financial Service Commission of British Virgin Islands country. I have not yet seen any complaints of people for that BVI FSC, although it's still tier 4 level regulation, so you should be careful still when trading with deriv, and also try to aim for high risk reward trades and to trade even in better market conditions than those which you see profitable in your back test. There might still be some small amounts of manipulation on your trades. Then this one, a tier 4 level regulating agency called FSA Seychelles, the Financial Services Authority of Seychelles. That one also has a bad report on the 55 Brokers website. I think that over time they have seen many complaints of people that when people reported certain brokers to FSA Seychelles and even FSC Berliz, the regulating agencies were not really helping people. And FSA Seychelles actually, it doesn't regulate the trading in itself, but more of just regulates the deposits and withdrawals. And then Vanuatu FSC deriv has one of these as an option. You shouldn't also choose this one. 55 Brokers website also wrote a bad report warning people to stay away from using brokers that offer that regulating agency, unless if the broker can offer you another regulating agency. And then this one, tier 5 levels, where there's St. Vincent and Grenadines. This is also another regulating agency which actually doesn't regulate the trading but just regulates the deposits and withdrawals. So I think FSA Seychelles regulates trading, but it has weak regulation. But then this one, FSA St. Vincent and Grenadines, this is the one which doesn't regulate trading, but only regulates deposits and withdrawals. And 55 Brokers website also wants us to stay away from that one. So for those who don't know the website, for 55 brokers, this is what it will look like. So they also give their recommendations on brokers. They also suggest good brokers, and they also warn of people of bad brokers and brokers which a lot of people have been complaining of. So even though they suggest what forex market broker, for Zimbabwe it doesn't offer us FCA regulation, which is tier 1 level. They only offer it for clients in UK country and other countries. For us Zimbabweans, what forex market this broker they recommend, it offers us FSA CHOs, which is Tier 4 level regulation. So it's still poor regulation for us here in Zimbabwe. And you can search on the 55 levels broker. Okay, you can search here, you can type here and then click the search icon on the right for regulating agencies and also for brokers. And some brokers are totally not regulated at all. You have to stay away from those brokers. And then for Zimbabweans, the best I saw, we have FX View and also xs.com. They offer us Tier 2 level regulating agency of the FSCA from South Africa. I think it's Financial Sector Conduct Authority of South Africa. Okay, so that was inside my account, but I'm going to the website so you can just see what FX View website looks like for those who are still new to trading. And FX View, their main website, which offers trading for other international clients, is different from ours, Zimbabwe. We use the branch in South Africa, here written Finvazia Capital, South Africa, on the lower part of the screen there. So even when logging your account on MetaTrader, you will be logging in your MetaTrader 5 account on that Finvazia Capital version of FX View. But here they haven't shown the actual website. So if you actually want to see the actual website with their services, you can just type on the FX View, and it's a better option in compared to xs.com because FX View, it offers a booking broker, a booking trading. So you will actually be connected to the actual, your trade will be sent to the actual market. Although if you do want, you can also get accounts which don't charge commissions but which are spread accounts. And you can also, if you want, you can choose the commission based accounts, since they give more confidence that you will actually be sending your trades to the actual market. Trying to look for where you see, okay, it's that version of the website. That's where you see the actual website. I should have typed in fxview.com, I think. Yeah, so this is the website. And then the other one, xs.com, which also offers us Tier 2 level regulation for Zimbabweans. But this one is a booking broker. So they don't send trades to the actual market, but they do have good regulation. You can trust Tier 1 or Tier 2 level regulation. And you should still know that most brokers, even though they will be booking where they make their own markets which are similar to the actual markets, most brokers, if they see that you are a profitable trader, they will start sending your trades to the actual market and then increase now the spreads, the commissions for the trades, because they will make losses if you are a profitable trader, and if they keep booking you. And then they will only still continue to book the traders who they see that are not profitable. Okay. So you can also use a, and then you should also be careful with brokers, even for those which have good regulation, that you shouldn't use stop losses which are too small, like on the 5-minute time frame. Try to avoid using stop losses that small, unless if you are going to trade in better market conditions than which are better than those in your backtest results. Okay, for forex, when trading forex currencies, try to use stop losses of at least 10 pips or more, and then maybe 8 pips if you are too aggressive. Then for indices, especially futures, there might be less manipulation on the spreads, so they can be slightly smaller, but try not to have stop losses which are too small. Okay, maybe try at least your stop losses to be at least that distance, or slightly less if you trade in market conditions which are better than those which are profitable in your backtest. But the futures, if you are trading the futures asset classes, they aren't floating spreads there. So brokers will not expand the spreads and try to take out your stop loss if the spread goes near your stop loss. So those are the scams which may happen in trading. And then also you will see that some brokers will not have a regulating agency, but they will be listed at the bottom of their website that they are registered with an organization called the Financial Commission. You should note that the Financial Commission is not an actual regulating agency. It does not regulate trading. It's more of only tries to help traders to be refunded their deposit, and they claim to help disputes between brokers and clients, which is us traders. But people over the years have been seeing that the Financial Commission is bribed with brokers, so they will actually solve disputes in favor of the brokers and against you. And also another broker which you should stay away from is Pocket Options, which offers binary options. It does have a regulating agency, but it is rumored to bribe the regulating agency which regulates it. So if you try to make withdrawals of significant amount of money, like $1,000 or more, it may start to deny your payouts, and it also manipulates trades on its OTC instruments, although it might not manipulate your original CFDs, which won't be OTC. And then it also is listed with the Financial Commission, but don't trust any broker which is only has the Financial Commission as sort of the regulation. You need a broker with an actual regulation. And then you can also go on the regulating agency's website to confirm that the broker is regulated there. So for example, for the FSCA South Africa, you can go there and you can actually see that access.com will be listed as Orivest something, because they had to create another branch of access.com which can accept us people in South Africa, including Zimbabweans. and you can, on any regulating agency, they actually have a list of the brokers which they regulate, and also what they regulate them for. So that is when you can actually then see that they are not just regulated for deposits and withdrawals, but also they regulate the trading. You can see there's regulated entities, list of regulated entities or persons, and then actually they have another side of website where they actually list those which offer OTC instruments, which is what we trade. So I actually showed you that in the group. I can then later on put the link maybe on the description of this video on YouTube. And then also, let me go back. If you go where it's written FSP search, each broker which is regulated by a regulated agency will be given a license number. So you can type in the number which the broker will give at the bottom of its website on the FSP search of the regulating agency. Or you can even search with the name where it's written search for FSP name. So I'm not sure if it will bring out the Orivest because I forgot the full name. It's Orivest something at the end, but you will see the full name at the bottom of your broker. They would have listed it there. Then you can come and just search. And if it's regulated for trading, they may use names like licensed for odd derivatives, or some were saying, I'll check the other names and then you can just check with me and confirm. And then you can also see by that way that the broker is actually A, booking for sure, or if it is B, booking. If they have a license for B booking to make their own markets, there is a certain term which they use on their license. If they have that license, it means that there's a possibility that they could also B book the unprofitable traders. Okay, then another scam in trading, my FX book. That is a software which traders use to display their trading performance in more detail compared to what a trading platform like MetaTrader can do. But even though the company My FX Book does not scam people, the problem is that My FX Book does not show whether the broker logged in there is actually legit. People can create fake brokers and connect them to the My FX Book platform. And then when the scammers now show the results on the My FX Book platform on their social media, when advertising themselves, you might not be able to really know if it was a real actual brokerage account. So not that My FX Book company is a scam, but people can use results displayed on that platform to show fake results from a bad broker. Then Elliott Wave is another trading method which is not profitable, which you also shouldn't use. Then what you should also watch out for are trading robots. These are softwares which are programmed to place trades on their own and look for trading setups without you having to look for trade opportunities. And it's very rare for you to find those which are consistently profitable. Nearly all of the ones being sold on social media are not profitable. And even though some may show trade histories, those trade histories might also be only of a few days, a few weeks, or a few months when the trading robot was performing well. maybe because the market was in a trending market. But when markets may change market profiles, the trading robot might end up making losses for you. So you have to be very careful when looking for trading robots. Those who have those which are consistently profitable most likely will not sell them. Okay, unless if it's a rare occasion for you to find a developer who still is looking for trading capital and will sell them. But you have to make sure that they can show a trade history of at least 1 year or more, which is profitable on a well-regulated broker. Okay, tier 1 or 2 level. Okay, you shouldn't trust trade histories from tier 3 to 5 level regulation on that website which I showed you, which ranks those regulating agencies. Because some of the regulating agencies, some of the brokers with those weak regulations, the brokers may partner with mentors who are scammers and give them fake real accounts, like brokers like Pocket Options. The people who you see on YouTube saying they turned $10 to $1,000 trading binary options, they are given fake real accounts with Pocket Options. Okay, so this is why you should also trust mentors who will be using brokers with regulating agencies of tier 1 or 2 level regulation, especially tier 1 level, which will be safer. Although in Zimbabwe we don't have a choice, we don't have tier 1 level. So you can see some of these people using Pocket Options, they are actually paid with Pocket Options to show these trading strategies which are not profitable, and they will be lying that they are profitable. Even also Deriv also pays some of its people to make strategies of indicators. Okay, and the strategies are not profitable, and even if some of them will show you trade histories, they may be fake real accounts, and some of them will not even be real accounts. And the strategies will usually be marketed with unrealistic returns of making very high returns in 1 day. Do not trust people showing these strategies which are too unrealistic, especially if they are not showing a trade history. Okay, and trade histories which are safe will be of a year or more. And trading robots might also have a disadvantage of making errors if you lose internet connection, if they are the type of trading robots which always have to have constant internet access. And then corrupt regulating agencies, those are other scams. I already told you that the ones which you can trust are tier 1 and 2 level regulating agencies. Although for Deriv, we have not had problems as Zimbabweans. There will be small cases of manipulations, but if you register your account under BVI FSC, you will have only rare occasions of manipulations on your trades. So remember, I told you that on this 55 brokers website, where they talk of brokers and other scams in trading and other issues, you can also search for a regulating agency in case if people complain a lot of it. Or you can also try to search it on Trustpilot website, the other one which I showed you that time. So here you will see that 55 brokers, they actually wrote an article on Financial Service Authority of Seychelles, saying that you should not trust its regulation. A lot of people have been complaining of it. Maybe you would actually have to type the full name for you to see the article. This is the one offered to us Zimbabweans by Hot Forex Market Broker, HF Market, the one you see recommended by 55 brokers. But for clients in UK, they offer FCA regulation, which is tier 1 level and very safe. Okay, so I'm not seeing that article where they wrote off FSA Seychelles. I'll see what you have to type for you to see it. But then FSC Berliz, this is also another article they wrote something on. I'll see what you have to type for you to be able to see the article. And then also St. Vincent and Grenadines, they also had another article on that telling you not to trust its regulation, because it actually does not regulate the trading. It only regulates more of the deposits and withdrawals. But even that will not even have strict regulation. If you want a list of the articles, I'll search for them when I'm in my free time. I'm not sure what they really were, what were the titles. And then fake P&L. Okay, also be wary of mentors on internet who show screenshots of one trade only as proof of profitability. You can't prove anything to be profitable with just one trade. Okay, it has to be a trade history, like those which I showed you, my trade histories on the YouTube channel, where you actually see summaries of all the losing and the profitable transactions. Okay, so if you see any mentor who only markets his trading services using only screenshots of one trade without trading strategies, it means that they are not serious. They are most likely to be a scammer, because if they were profitable, they actually would have marketed using a trade history, because it actually shows that the strategy can be profitable over time. Okay, but there are actually a lot of people who show screenshots of just one trade, even though I don't have enough time for me to be able to search for more search results, so the video won't be too long. And also, for legitimate proof of profitability, it's better to trust annual trade histories, which is just a trade history of 12 months or more, hopefully on a well-regulated broker. So those which will be regulated with tier 1 or 2 level regulating agencies, which can also include FCS.com for us Zimbabweans, and also FXView broker. Again, then fake testimonials, another scam. There are also mentors who use fake testimonies, where they can just use another cell phone to create another testimony. There are actually people who have what are called farms for reviews, where they will be in a room with a lot of phones and they create fake reviews. Okay, and then companies can come to those farm reviews companies, and then they will be given fake positive reviews. I actually saw them somewhere. I could show you later when I have more free time. And then another scam in trading are those where they offer extremely high returns, especially if they don't have proof of consistent profitability of at least an annual trade history on a well-regulated broker, where the returns may be like 100% in a day, 100% interest in one day, or such types of returns. Those returns may be unrealistic, or if they promise you 1% interest every single day, you can't have profits every single day. There are going to be days which will have losses. Even some weeks may have losses in losing streaks. But what's just important is for you to be profitable long term, in the long run. Sometimes you can even have a month which may be a bad month, but it's still okay if you still have other good months. And then also guaranteed returns. That is what I was saying, where they promise a certain percentage every single day. No one can promise a certain percentage every single day, but you can have profitability guaranteed in the long run if you have good trading methods based on good logic, in which you win more times on your win rate than the number of trades that you lose, where you have over 50% win rate. Then also be careful of network marketing companies, multi-level marketing companies. They usually, actually nearly all cases, they don't teach profitable trading methods. I have never seen a network marketing company in trading which teaches profitable trading methods. They have to hire teachers to teach at the school, and usually if you have profitable mentors, they do not like to be attached to a company where they are told to be present for a given number of hours per day in form of a job. So they usually end up having unprofitable mentors. I actually have never seen one which is profitable. And they make the problem of focusing on recruiting, and because of the recruitment, some people end up exaggerating their returns that they will be saying to be making. And the other problem with network marketing companies is you have to pay monthly subscriptions for the lessons, so you may not be able to learn enough to be profitable yet by the time that you will run out of money to continue paying for the monthly subscriptions. Then for signal providers, signals are just an instruction of you being told which trade to buy or sell by someone who offers that information, with the take profit levels and stop loss levels, and which instrument, which may be a certain currency, to buy or sell. Although they are profitable signal providers, the problem with some of them, most of them are scammers, and some of them may have a high win rate where you win most trades, but the problem is they will have a bad risk reward. They will be risking more money than what is to be gained. And some of them may also show fake results in the group. So what some of the signal providers do on a sell trade where you are predicting price to go down, if this is the entry price, the middle line, you'll be expecting price to go down, and that should be your reward. And when it goes up, if you have a small distance like that, you will have a high reward to risk. That's a good trade. But what some of the scammers do now is that with the middle line being the entry point, this may be the risk and this may be the profit target when you are predicting price to go down. So you will be making smaller amounts of money on each winning trade compared to the amount of money you will lose on each losing trade. In the long run, you end up not being profitable even though the win rate may be high, of you winning more trades than not. And remember, some of the mentors who are scammers, a few of them, they partner with brokers, especially those which have weak regulation, and they may offer bad signals on purpose to make you lose money. And then the pre-booking broker will pre-book your trade. So be careful of brokers who give you a link of a broker telling you to register an account with that broker so that they give you trading signals. Some of them also scam people that way. Trading robots earlier. So that's a summary of the common scams in trading. Trading methods which are unprofitable, where they tell you that it doesn't matter if you have a bad win rate or bad performance, just aim for high reward to risk, even with a low win rate of like 30%, where you only win trade 30% of the time in terms of direction. Those strategies give you problems because you don't have a guarantee of getting high reward to risk because of the low momentum, which is causing that bad win rate, that bad percentage success rate. You may even see someone showing such strategies having profitability maybe for a few months or a few weeks, but in the long run, you may end up having problems guaranteeing that high reward for risk ratio. And also be careful of the expert advisors, copy trading, brokers and trading platforms may list people who are not profitable being profitable. I actually know someone in Zimbabwe who, on what forex broker, they listed someone who's not profitable is a profitable trader, and she linked their account to that expert advisor, and the expert advisor actually blew her account and lost all the money in the account. And also remember that you also may also fall in the scam that some of the expert advisors, and also even in trading robots, some people may upload trading results only when their system was profitable, maybe just for a few months or a few weeks when it was in a trending market. And you can also verify regulation of brokers on that website which I gave you. I'm going to put a link of the website in the description of this video on YouTube, on the YouTube video. And you can only trust brokers which are tier 1 or tier 2 level. Then if you are outside of Zimbabwe, if you can access tier 1 level regulation, the best ones you can use are FCA, Financial Conduct Authority of UK, and CFTC, Commodity Futures Trading Commission. Then another very good tier 1 level regulating agency is ASIC, the one in Australia. So I'm going to copy this link and then put one on the description on the YouTube video channel, but I already had given you that link. So remember that most mentors are not profitable in trading, so only trust those who show profitable trade histories, preferably a year or more, and on a well-regulated broker. If you have any other questions on scams, just tell me.